Welcome to Behind the Curtain, Nashville's movers, shakers,
and tastemakers.
Brought to you by Cord Real Estate, your key to the heart of Nashville. I'm Steve Luther alongside my co-host Van Hoye.
Here we peel back the layers of Nashville's vibrant scene, sitting down with the innovators, creators, and leaders who shape our city. From music to business and everything in between, we dive into the journeys that have brought them to where they are today.
We're here to uncover the stories behind the success, the passion driving their pursuits, and why they've chosen Nashville as their stage. It's about the people who dream big, push boundaries, and make this city truly unique.
So join us as we explore the heart and soul of Nashville through the eyes of those who know it best.
Well, today we're pleased to welcome Tammie Gravlee, CMB AMP, President of Mortgage at Bank of Tennessee, and a highly respected leader in the mortgage banking industry. With over a decade of experience spanning mortgage operations, credit, and banking, Tammie has built a reputation for operational excellence, strategic leadership, and team empowerment. She holds the prestigious Certified Mortgage Banker designation, one of the industry's highest professional credentials, reflecting her deep expertise and commitment to best-in-class lending practices. Prior to her current role, Tammie spent more than 12 years at First Bank, where she served as Senior Vice President of Operations and Director of Mortgage Operations, overseeing complex mortgage administration functions and driving sustainable growth. Throughout her career, she has been passionate about fostering a culture rooted in integrity, collaboration, innovation, and exceptional customer service, while helping teams navigate the evolving complexities of mortgage lending with precision and care. Tammie, welcome to the show.
Thank you for having me.
Wow.
So give us a little background on you. How did you get started? Did you grow up in Nashville? Did you grow up somewhere else?
I did not. I actually have been in Nashville now for 10 years in May.
Okay.
I am a Alabamian.
Oh.
Sorry.
Alabama.
That's so funny.
Yeah.
People have such reactions to that.
They do. Roll Tide.
Why? Why do they have such reaction?
I don't know. Probably because of Roll Tide.
Is that
absolutely?
I would imagine. Because everything I say.
UT Alabama, that's a massive rivalry.
Oh, I see. I see.
You're on one side or the other of that one.
But you're from like Maryland and Texas. What do you care?
Yeah, I'm originally Houston. Yeah, I really don't care.
Uh-huh.
But he's smart.
But I know my Tennessee people care.
Oh, he does. He does.
SEC, it lives on.
That's true. I'm with that.
I'll say go Cougs. How about that?
Ooh.
So originally from Alabama, all of my life, was with a mortgage company, an IMB, which is Independent Mortgage Banker, and we had about 50 employees, and we did an asset sale to First Bank, which you mentioned in the bio, and that brought me here traveling most every week, well, all the time actually, which is why I decided to just join the zip code back in May of 2016, but started traveling 2014. So I've been here a little while.
Well, that was a good time to arrive in Nashville.
Yeah.
It absolutely
I
was.
mean, come on.
Unless I was looking for a house, which took me forever.
Well,
what got you into the mortgage industry? Were you were you in like finance, or were you like sales, or what drove getting into mortgage?
So that's an interesting story that probably no one other than myself finds heartwarming, maybe.
wow. You said it's interesting.
It is interesting, but if you know mortgage people, there was no such thing as mortgage banking college courses. You might have taken finance and you ended up there, but most everybody in mortgage ends up here by mistake. I actually
kind of like realtors, right?
Exactly. So honestly, I was going to college for fashion merchandising. That was my thing.
Ooh.
I'd always wanted to do that. Just intrigued me a lot. But I met the love of my life, who was also in Alabama at the same time. And he was older than I was, well-established, self-employed. And I had to move away. There's no such thing as fashion merchandising in Alabama.
Oh, listen to that.
I took a step back and love won. And I literally started looking for a job to try to finish out some courses at the local college, which I never finished, by the way, sadly. But we started dated 2 years, married 2.5 years after we started dating. and we've now been married coming on 41 years. So
Wow.
How
that's
cool.
how I got in the business. I took a receptionist job at a mortgage company.
Okay.
And just moved up.
So see, that's not a real interesting story.
I think it's great.
It's very interesting. Yeah.
41 years.
Yes, and he's still the love of my life.
See?
So how do you go from being a receptionist into director of mortgages?
A lot of learning, a lot of asking questions, a lot of education. Sadly, too, being a female, probably stepping into things that I wasn't qualified for but thought I was, trying to prove everybody else wrong. And literally mortgages, like I call it Hotel California.
Ooh.
You check out anytime you like, but you can never leave. And I've tried several times, but it's all I know. And it's been intriguing for me. And I think the intriguing part is every single day I learn something. There's never a day that I do not learn something. And then I question myself, now, wait a minute, why didn't you know that already? But I think everybody in this industry is like that. It's ever changing. Nothing stays the same. And you get up every day and it's completely different. And I'm not real good at sitting behind a desk and everything being very mundane. So I think that's what's kept me there, is just the fact that it's just ever changing. You meet a lot of new people every single day. And quite frankly, the biggest reason would be this is the business where we get to put people into a home and they create families.
That's right.
And so a lot of times, myself included, we lose sight of what that's really about. But all I do is, at the end of the day, to ensure that the American dream is met. And
she's a dream maker.
Yeah, that sounds great.
I
Put
like
that behind my name.
Absolutely.
Thank you.
Now, curious, I know the mortgage industry, real estate has changed a lot over the years. It hasn't been that terribly long since, at least in the state of Tennessee, you haven't had to have a license to be a mortgage broker. That's a relatively new thing. Do you think the path still exists in the industry today where you could start as a receptionist and kind of work your way up? Or
that was literally what I was thinking.
Really?
Literally. And I don't read your questions.
Well, that's not on there.
Oh, it's not?
No, not at all.
I was literally thinking, could that happen today?
Yeah.
Well, I think it depends on the individual. It is absolutely a possibility, but you've got to be willing to put in the work. You've got to be willing to put in a lot of long hours. You guys are in real estate. You get that.
Yeah.
There's no such thing as 8 to 5.
Well, clearly you put in the work.
Well, it's been a long 40 years.
Yeah.
It has, but I've had fantastic mentors. The networking is unbelievable. Mortgage Bankers is an association of which there is just so many outlets to help you get to the point that you want to be at. There is no end to what you can do in this business if you're willing to learn and you're willing to work. And like any other business, there's bad apples, bad actors.
Sure.
But I think those do also kind of fall away to the wayside. And I am probably sometimes known for I'm not necessarily a rule follower, but I am, I'll take it to the edge, but being true and honest, not only to yourself, but to your customers and to your clientele and to your team, and the integrity that you show. And if you show that you're willing to do all of that, you show empathy, not sympathy, but empathy. All of those things combined, I think, would allow anybody to do whatever they wanted to do. This is America. You can do what you want to do.
That's right. That's good.
So
we call him the chief troublemaker.
The chief You're not a rule follower.
No.
Well,
he writes his own rules.
There's always a better way to do things, right?
Absolutely.
You never have it perfected. So yeah, my role is to see what I can break and figure out how to.
Now we're talking creativity. We're not talking legal rules.
No.
For the record.
For the record.
We do everything legally.
Yes.
Ethically.
Hardcore. Yes.
Absolutely. I would think most people in a room with a mortgage person, their first question is, well, what are rates going to do? What are we
Oh,
when are we going to
Oh,
see
you
rates
had to
go down?
go there already?
I'm not going to ask it that way. I would like for you to explain to people, in as simplified a way as possible, how mortgage rates actually get set. Because I think a lot of people have a misconception that, oh, the Fed's going to do something and that's going to change mortgage rates overnight. That's not really how it works. Can you explain to people, like, what is the process? Like, how are mortgage rates set? What causes fluctuations? Those kinds of things.
I'll try. And yes, you're correct. That is the first question everybody wants to know, and they want to understand, which there are days I have to sit back and go, now, how does that work again? Because unfortunately, probably over the last couple of years, we've seen a lot of things happen that also take us by surprise, that
Sure.
move the market in different ways. And that changes based on, what's going on in the administration. Not going political there. I'm just saying every administration can do things that change those opportunities for the market. But probably the simplest way for someone on the street to understand how to manage, when should I look at the interest rate being best for me, follow the bond market. The bond market is what really drives our interest rates. So the feds can drop their interest rates. They can go to, obviously, we did this, almost zero. And that's not good for the market, and we're paying for that. We're trying to right size now. And there's multiple things that can affect mortgage interest rates, but mostly the 10-year yield, watching it and watching the bond market is what drives our interest rates, whether that's up or down. The yield curve, and I don't want to go too crazy there and make people go, what is she talking about? But there's not a science to it. If there was, I would not have been doing this for 40 years. I would have figured it out a long time ago. I would be sitting on my private island and ringing the bell for my butler. So you can still do all the right things and try to read the right gauges and still miss it. Not this last Fed change, but the one before that, everybody was just completely sure mortgage rates were going to go down. And instead, it wasn't the adjustment that the Fed made. It was the statement in the news that the Feds made that caused the market to go crazy. So yes, the Fed went down, but we went up. And trying to explain that to a home buyer is very difficult.
Yeah.
Unless there's someone who really is into the market and they understand how those rates are actually adjusted. It is very hard.
Well, it can be emotionally frustrating too.
Sure.
So. Very.
And correct me if I'm wrong, but I mean, it largely comes down to someone is making an investment for a mortgage to be made. Like someone is putting money up, right?
Right.
So you're looking at a 10-year in the bond market because you're talking about typically long-term mortgages. And so investors have got to look at, where am I going to get the best returns? And, what are things doing over here? Do I want to shift some money this way or this way? It really, it comes down to, if an investor feels like it's a good long-term investment, then they'll adjust the rate to where they need to be to get that investment, right?
Well, I think too, a misconception for most everybody, including a large percentage of mortgage professionals. So I want everybody to know that it's not just the common public that doesn't get it. We have a lot of mortgage professionals that very siloed in what they do, possibly. And I think where everyone kind of gets caught up a little bit with trying to determine what the rate is, why did it move, why did it not move, why did it go up, why did it go down, is because they're thinking about the current time. So to your point, it's long term. And the loan that is done on the day of closing, your family goes to the closing table, they sign all the documents, they get the key, they go to the house, they move in. That is just the beginning for the investor and for what we call the secondary market. What things that people don't know probably is that they're looking at historically what that borrower or what that particular area geographically or in product, how long does that typically stay on a book for an investor? If it stays short term, they're not likely to be as happy to get that, and you're going to have to pay more for it.
Sure.
If it's a long-term investment for them, to your point, they're going to give you a better rate because they see historically and the data tells them this is going to be on the books for a long time. That's where investors make their money. They do not make their money by closing costs. They don't make their money with the actual interest rate as to what it is the day, what we call best effort. Best effort today is not what really the best effort rate is 60 days from now when your mortgage lender delivers that loan into the secondary market. And when it goes into the secondary market, that's how we make our money as the initial lender, because that's how we're trying to present the package. Is it long term? Is it short term? Is it a risky loan? Is it a risky borrower? Is it a risky property? So there's so many factors that go into what does it really look like and what can you be offered today for an interest rate, not just the Fed.
And you guys are you've got a profit margin, you've got a hit. I mean, a bank is a business as well, right?
Absolutely.
So you're trying to play with front end fees versus the difference in the interest rate that you can get a premium on when you go to the secondary market. So you've got to play back and forth with those numbers, but everybody's pretty much playing by the same rules now with a lot of the regulations that happened last recession, right?
Absolutely. So you mentioned a little earlier license. There was a lot of things that changed when Dodd-Frank ruling came out, when TRED came out. All of those things required a lot of regulations that, quite frankly, our industry needed. Now, as usual, depending on the administration at the time, we go from one end of the pendulum to the other. We never hit a happy medium.
Yeah.
So we went way far out of the box with regulation, and we made it extremely difficult for lenders and for borrowers. Borrowers had a hard time actually getting into a house because the guidelines, quite frankly, were just so stringent. Then, as you probably know, you've been in the business a long time, we swung to the other side. And as long as you could fog up a mirror, you could get a mortgage. So then we come back to, okay, now we're going to pay for that as a market because we allowed people in homes. We set them up for failure, basically. We set ourselves up for failure. And one of my old mentors said, hey, we asked for it, we got it. Live with it. Now figure out how to get out of it, was pretty much what he would tell us when we were all in a little group talking. So we now again, and we come out, again, I'm not going political, but in the Biden era, we were very regulatory restrictive. And now we've come into the Trump administration and they're loosening it up. But sadly, in a way that we're just speaking about it, we're not looking at it very closely to go, how does this really affect the market, short term and long term?
Right.
So I don't think any of them really help us with those changes. So we have to be nimble and make sure that we're adjusting either way. And what we typically will have to do is just step back and just wait for somebody to give us the ruling, and then we try to follow it as best we can. But all of the rules that came into play with Dodd-Frank and with the TRED and RESPA guidance, the majority of them were necessary. The license, I mean, think about it. You're a real estate agent. You had to have a license to be able to do what you're doing. A doctor had to go to medical school to get a degree. And so now you're going to take the biggest transaction of an individual or a family's life, and you're going to get some yahoo, sorry, probably not very professional, that was selling AT&T phones a month ago.
Right.
And you're going to trust them to tell you exactly how you need to actually proceed. That's scary. So
nothing against AT&T.
No, absolutely
Yahoos,
not.
or anyone selling phones.
Thank you for the disclaimer, Van.
Just here to be a blessing.
Yeah, and you are. So, but those particular regulations, very necessary. We go a little bit too far sometimes in the way that we manage that. I'm not sure I even answered your question there because I got off on a tangent. I'm sorry.
No.
Do you think there's possibility we ever let's get the crystal ball out. Is there a possibility we ever get back into the sub 3 interest rates that we saw there for a while?
I hope not.
Yeah,
I hope not. I doubt it because we're seeing the repercussions of that today. You're probably dealing with this too with inventory. I mean, we have people who are sitting on 2.5% and 3% interest rates. They want to move. They're not going to.
Sure.
They're just not. One, they probably can't afford to because they got into a home that was completely out of their price range, and they're enjoying that, which great. That's awesome. But they're not going anywhere. And so sadly, divorce, death, or transfer is about the only thing that moves those people. So what we have is a level of, maybe you could call them baby boomers, who are sitting in those houses that we really need the first time home buyers that are ready to move out of their first time home into that next house. But there's nothing available for them because those people are sitting in that range. They're not moving. So then we lean to new construction. And then you've got all the regulations and the tariffs and all of the good stuff. So there's always an obstacle. We overcome them as an industry. I'm sure you do too. You find the house, you figure it out. We lower our standards as a consumer. Like, I really wanted that house, but I'll take this one because I'm not going to get that for interest rate purposes, or, programs change. So, what was called the old subprime, those loans are not available anymore. Thank goodness. I mean, they were dangerous and they were only for certain people, but unfortunately we opened up the barn gate and we let everybody have them. So there's a lot of things, and I will tell you from a mortgage perspective, and any of my mortgage friends that might be listening to this go like, God, don't let her ever speak for us again. We don't learn our lessons very well. We like to keep touching the hot on the stove, and so we just keep doing what we need to do. And sometimes it may or may not be the right thing, as far as, is it the best thing? But sometimes it's the only thing. Obviously, we don't make those decisions for our consumers. We lay out the opportunities for them from a finance perspective and let them decide. And we're required by law to do that, by the way. We can't just say this is the rate for you or this is the product for you. So, I don't think we'll get to 3%, and I hope we don't. If we do, I think I'm going to consider retirement. At least from the mortgage industry. Or
sell lots of mortgages and then retire.
Van, I like the way you think.
I mean, I think we live in an aspirational society. We've got Instagram, Facebook, whatever we see, the next greatest brands and the next greatest style of house. And, it's a modern farmhouse. Now it's warm, contemporary, and whatever. Oh, I got to have that. Got to have that. Got to have that. Oh, who's doing that?
Barn dominion.
I think that that consumerism mindset
makes you just want the next thing.
Yeah, I mean, I mean, this is definitely a bigger problem, I think, with Americans than a lot of other places, where you want what you want and you want it right now.
Absolutely.
And,
like Japan is very long-term thinking. I think Americans have got to start to switch a little more long-term and realize you may not get exactly what you want right now, but you got to get in the game. You've got to start making these kinds of investments, or you're never going to get there, because the gap is just going to get bigger and bigger. So you gotta give up on a few things right now to get in the game.
You got to get in. Yes.
Sadly, I think we're a nation that, and hey, I'm speaking to me too, right? We're very spoiled. And that has afforded us the ability to get what we want when we want it, the way we want it.
Right.
And I don't know that we'll get out of that particular mindset as easily as you mentioned that we should. Right. It would certainly benefit us if we would, but we're a microwave. And we even stand at the microwave now going,
right.
Can you please hurry?
Exactly.
So we want things when we want it.
Mm-hmm.
And that's okay.
Don't you think though that, like, with with what we see, especially first time home buyers, they want what their parents have, versus hey, I don't even think of it as lowering their standards. They just need to get into something, like you always say, just get into something, ride it for a few years, 3, 4, 5 years, and then if you bought in the right time and the right price point, and you aren't overbuying, and it's the good things are happening in the market, then it goes up in value. You've got some equity, rock and roll. Now you could go to the next, and it might take you 2 or 3 houses, but then you will get to what you really want. It just not yet.
Yeah.
So the answer is still yes. It's just yes in a bit.
Well, probably, I would say specifically, I have 3 children.
Yeah.
I would say that as parents, we probably don't focus as much on, hey, there were hard times.
Right. We want to make it all
we started
good
out
for Facebook.
Yeah, we started out in the little Matchbox house
Right,
over here,
right.
and we worked our way up. And by the way, we had a lot of hard times getting there. By the time your children are old enough to really see things
and have the memories,
yes, you're probably very well established.
Right.
They see, the dinner parties, the pool in the backyard, the 3-story house, the great lawn, and somebody's cutting the lawn for you, somebody's washing your cars. And we don't say, hey, we didn't just show up here.
Right.
Okay. We worked really, really, really hard to get here. And by the way, we had a lot of stumbling blocks and we fell. We fell down a lot.
But
we just got back up.
We could really dig into this.
Well, I mean, that's kind of the natural cycle of things, right?
Right.
Like people that go through hard times, I think it strengthens them in a lot of ways, and they're able to, excel and go after things and succeed. And then their kids that are growing up with the success don't know those hardships. And so they end up going the other way.
Well, and sometimes we're embarrassed to share that too.
Sure.
I can think back on my life, personally and professionally. I learned more from my failures than I ever did my successes.
Oh, but I hate to admit that.
I do too.
I just don't like that.
I don't either. But I will say your failures can really build longevity and character.
100%.
If you pay attention to what you did right and what you did wrong.
Right.
So
that's good.
What about there have been some talk of maybe a couple of I guess I'll call them new programs potentially coming out where you have either portable mortgages or 50-year mortgages. Do you see either of those things really happening? And if they do, ultimately, is that a good thing or a bad thing?
If they would work, possibly a good thing. But you just mentioned a couple of products that you're like, now how does that work? I don't think anybody thought about it before they spoke it.
Yeah.
And I don't see traction with those things. First of all, a 50-year mortgage, if you really sit down and you look at it with a financial oversight, worst thing in the world you could do. Just think about it. I mean, 50 years, really? I mean, it's like going from 3 years on financing a car to 8 years financing a car.
Right.
Like, you're upside down. You have to be all the time. Obviously, not as much of a depreciation as a car because that appreciates and you can build equity. But a 50-year mortgage only cures a short-term problem, which is your monthly payment.
Right.
What's the difference between that and like an interest-only loan?
So a 50-year loan would be amortized over 50 years. So it would be a fixed interest rate, and you would pay principal and interest along.
I mean, effectively, though. Like, who's going to stay in a house 50 years?
Nobody. That's why it's a bad.
So why wouldn't you just do an interest-only loan?
Well, interest-only will typically carry some qualifying factors that not everybody can actually qualify for.
Gotcha.
And interest-only loans are not as popular as they used to be. They were kind of some of the downfall of the last mortgage crash that we had, or mortgage economic crash.
Because you're relying on the house appreciating.
Well, and when it turns out of interest-only, people can't afford it usually.
Gotcha.
Now, interest-only is not a bad program. It's a good program for the right individual.
It's a tool.
It is. It is just another product that is good, just like a down payment assistance for someone. It's not for everybody, but there are consumers that could benefit from different types of products. We're unfortunately, or fortunately, I don't know which way you'd look at it. You have to remember, I'm thinking old school. So what we have today is really vanilla. There's not a tremendous amount of products out there. There are some products though that are coming into the market very fast and furious, and they're called non-QM. So they literally are good loans though. They're not your old subprime, and a lot of people get really mixed up with that. They're not your subprime loans. An average credit score for a non-QM loan is going to be 700 to 740, typically 20 to 30% down. But the difference is that those particular borrowers do not fit into what we would call a GSE, Fannie or Freddie box. They're good loans, self-employed individuals, spurge of income at certain times of the year or once a year. And those people manage well to that because that's how they've built their entire life.
Right.
But they don't fit into a Fannie Freddie guideline, which can be pretty stringent from a qualifying perspective. So that product, and I heard a statistic, I do not know if it's accurate or not, so hope nobody hits you up on this. But disclaimer, don't know if it's accurate, but I've asked a few people and they seem to think it's close. Our mortgage volume over the next 2 years is looking at $80 billion in non-QM loans because people are so non-traditionally employed these days. Right. It's not a real 8 to 5. You've got a lot of people who got very interested in having the flexibility of working from home during COVID. Afterwards, when some of the companies said, let's go back to the office, they said, thanks, but no thanks. And so they found non-traditional ways to create the same type of income that they needed to support their family. Those are the kind of people that might fit into those non-QM loans. Mm-hmm. So the product line itself, the product suite, has not really expanded a whole lot, but there have been some adjustments so that we can meet the needs of the consumers who are non-traditional. A whole lot less non-traditional these days than there have been in the past.
What does QM stand for?
Qualified mortgage.
Non-qualified mortgage. Oh, that's so sad.
So, I mean, this would be a big thing in Nashville, Music City. I mean, the entertainment industry is very sporadic and pay a lot of times.
Mm-hmm.
So,
absolutely. We do
Story
a lot
of
of
my life.
Call me, Van. I got a mortgage for
you. So, what about trends? What's coming down the pike? Where do you see things going with things like stablecoin regulation? And there are mortgage products that are crypto blockchain related now. Do you see a shift to more of that? How does that affect the traditional mortgage industry, the banks?
I think most of that type of product is going to come out of straight Wall Street. You're not going to see a lot of the investors or what we call aggregators or the GSEs. I think they'll have to at some point. It's just like, we're doing non-traditional income now for certain, I don't know if I need to say this or
not. Ooh, do tell.
Well, let me back up.
Who?
Let me just back up.
Inquiring minds want to know.
I think we'll have to see some expansion on what the private investors will do versus just straight Wall Street. They don't mind a riskier outlook.
Right.
But unfortunately, Fannie and Freddie, they're in conservatorship. Surprise, just in case anybody didn't know that. And so they're regulated by FHFA. So they have to do what that agency requires them to do. So there's a lot of probably, I would say, uncertainty on which direction they're going, whether they stay in conservatorship or come out. Mm-hmm. I think if you ask 10 people, you get 10 different opinions. I don't know. I don't have
You don't have anybody on the inside?
Yeah, I wish I did, but I don't.
I mean, there's talk about them being privatized, right?
Yes, but I don't see that happening anytime soon. It may. Tomorrow we may wake up and have a totally different outlook on everything that's happening. Who knows?
Every day I wake up, I think, wow, that just happened.
Yeah. It's like, okay, I cannot be surprised anymore. And the next day you're like, oh my God,
There
how
it
did
is.
that happen?
And there it is.
You're right. There it is. So I will say that as we move more into the AI world, that's the big thing right now with mortgage is how can you use it? Who can use it? What do you use it for? And how is it regulated? So that more so than blockchain, Bitcoin, and those kind of things. They got a probably, I would say, a little surge a couple of years ago, a lot of attention, and they just kind of fell by the wayside a little bit. So honestly, that's not even topics to my knowledge in the group that I kind of hang with.
Sure.
So if it is, somebody tell me so that I can catch up. But I don't see that happening anytime soon. Now, there are some provisions and guidelines that will allow you to use certain assets or income from those particular sources,
Right.
but not necessarily managing the actual industry or the loans in that direction.
But you would think probably most lenders, most banks are probably going to start at least recognizing Bitcoin holdings or whatever as an asset.
Yes. And they are doing that. It is far and few between. You've got a lot of investors that they're like, nah, sorry, we're not getting into that. And mostly because there's just not enough data historically for them to understand what are they really saying yes to.
Sure.
Right.
So, as that's revealed and there is more people who get into it and you see some historical data, and you got to remember, our entire world now lives off data. So if somebody can provide the data and it's accurate, then obviously we can see some changes at that point.
So when we see Jamie Dimon and Larry Fink hanging out in Davos with some Bitcoin thing on their chest, then we'll know.
There you go. There you go.
I always love how they say one thing but appear to do the exact opposite.
Well,
you never know.
They're like Hollywood stars.
Yeah, they are.
Any kind of publicity is good publicity, whether it's bad or good. So you just got to say the popular thing.
Yeah, that's right.
There's a lot of murmurs around.
Murmurs, whispers
around stable coins, and apparently there's a lot of discussion in the White House between the bankers and the crypto guys about what kinds of interest rates they can pay on and banks are making money by bringing in deposits and then lending them out. So is in your circles, is there any discussion around that? Like, if some of this stuff happens and people start putting money in stable coins because they can get 4% instead of a 0.000% at the bank, how does that affect how much lending is done?
Obviously, it could. I think you will see maybe you need to call Jamie Dimon for this because he probably has a whole lot more insight than I do. Well, not probably, he does. I think that banks are doing their best to get out of the traditional banking and trying to lean more toward, you've seen kind of the movement just over the last probably 4 to 6 years or so. There's more digital banking. Yeah. How many people go into a bank today? How many people write a check today?
Hey, just for the record, the banks forced me out of the building. They quit letting us come in. They're like, I go in because I love my bank people. Love them. Always have. Some of my bank folks were like at my wedding, and were like right up front. They even donated some of the flowers. And I'm saying, I go in and they're like, hey, you can do this through the drive-thru, right? I'm like, well, I wanted to see you. And they're like, well, but they tell us to tell you.
Let me caveat this real quick.
But then I go through the drive-thru and there's a window, or there's 6 months later, there's a thing on the window. The drive-thru is no longer in use. You must go through the machine. I'm like, what's happening? They're forcing us out. Makes me sad.
Van still uses a paper book for a calendar.
And I just ordered a whole new book of checks.
If you're setting an appointment with Van and he doesn't have his book, he has no idea if he's available or not.
I have no idea what is happening later in the day, let alone 2 weeks from now, if I don't have my book.
Me.
Oh, yeah.
I'm not sure that van is the norm anymore.
And I just found out I can have custom checks. So I got a check.
Oh my
I just had
gosh.
checks printed.
So you write
Carrie.
checks
Oh
still?
yeah, I love writing my checks.
Oh, I hate writing checks.
And I've got a new checkbook, right? And I've got Carrie, my wife, and I on the beach, giant hats,
Oh my.
huge smiles. You write the thing right on the teeth. It's perfect. It's very fun. I like.
See?
She even offered to take a. I said, my favorite bill to write is the water bill because they still take a check and I drop it off. I don't even mail it, and I write it. She goes, "Ooh, let me take it in. It's on the new checks."
Wow.
We're as cheesy as it gets.
Now, for the rest of us,
Yeah, I would
we
say
don't like that.
You're in the minority, no doubt.
My
But
whole life.
But I do
My
love
whole life.
it. And not to age you or
Yeah.
compare you, but that would be my dad.
See?
My dad still likes
See?
to take his insurance check, and
Yes.
he just no, I'm not putting my social security number or any number in that phone. Nobody's gonna get it.
No.
He is texting. He's a good
Yeah,
texter,
yeah.
but outside of that, nothing. It's still the
See?
old school stuff.
But I mean, there was a time not that long ago when most people were like, I would never put my credit card information online.
Absolutely.
What are you talking about? Order
That's
stuff
true.
online.
That's true.
I got boxes coming every day at this point. It's
Well,
like,
I can't disagree with that one. I can't disagree with that.
Well,
one.
banks are definitely that would. I mean, they've got to keep up, right? I
Yeah.
mean, how many Gen Zs do you know that know how to balance a checkbook?
Well, they don't even have a checkbook.
My point.
I mean, come on.
My point. They would be one. What do you mean balance a
Right.
checkbook?
It balances it for you when I look on the app. It tells me my
Absolutely.
balance.
Absolutely. So they have no choice but to keep up.
Right.
So to your original question, I think the larger banks are probably dabbling in that a whole lot more than your mid-size and your regional and your community banks. Eventually, it will push some people out of the business. You'll probably see some of the smaller. Well, and this is my opinion. This is not an opinion of anyone else, but you either are going to have to keep up at some point, or you have to close your doors.
mm-hmm.
So you either close your doors,
or you have friends who keep just
That's
enough
right.
tech in your life so that you don't get left in the wayside.
keep you up to date, right, man?
Exactly. So people
No.
think you are.
Absolutely. So it's coming. There's no doubt. I mean, we'll all be flying around in our cars before too long. So there's a lot coming. I can personally tell you, I do not know as much about that as probably I need to. I'm one of those things, let me just make it through today. And so I haven't studied
Sure.
a lot of that. I haven't participated in any of it. My husband does a little bit as far as, I said, give me the Cliff Notes. I don't need to see the whole, just tell me the Cliff Notes. I'm good. He'll read articles and say, did you know? And I'm like, didn't have a clue. But, it's coming, whether we like it or we don't.
It's all
and I think
coming.
it is. So I think the digital banking of them trying to say, hey, go to this app or go to our website or go is their initial stages of trying to get to that point.
Mm-hmm.
They already took our pennies away.
They did. Are you sad?
Yeah, I'm so sad. I love my pennies. I always stop and pick them up.
Wait, you hang on to them because
I do. I keep them.
enough years go by.
They'll be worth.
Those pennies will be worth something.
Absolutely.
Someday.
Just hold on.
My grandchildren someday will go through my house. Look at all these. What are these? That old fangled money.
You'll have to leave a sticky note for them so they'll know what it was.
Everything in my house needs an old sticky note.
Oh, I doubt that.
Oh, you'd be surprised.
I doubt that.
It's a lot of old stuff in there.
You mentioned AI. There's all kinds of discussion. Every industry, like how much does AI replace? I can't imagine when it's such like a major financial decision for most people. You can get rid of just customer service at least. Like people are going to want someone to talk to, I would think.
I agree. Well, as long as things are going well and it says
Yeah.
next, or it tells you, okay, that's great. Next, what's the next question? It'll be great. The minute that it stops and it's like, you have an error.
Yeah.
Who are you going to talk to? And I am, like I use AI all the time.
Yeah.
And I find myself, I'm sure you guys have seen it too, the little memes that are like, do you really want to see the doctor with the piece of paper on the wall in a frame, or do you want to see the doctor that used AI to graduate? I don't know, because AI has been super helpful to me.
Mhm.
I mean, super helpful. But I think the mindset around AI, especially in our industry, that we are really trying to focus on and share with people, because it's just like changes we've had throughout the year. You probably have heard the term AUS, automated underwriting system.
Sure.
Well, when it came into play, which has been years ago, everybody freaked out. Oh my gosh, every underwriter is going to lose their job. Underwriters did not lose their job.
Right.
Somebody has to actually look at that information and validate it. Now, AI is taking over the validation part and the scanning part and those types of things. But where I think people
Except
will,
AI lies a lot.
it can. You're absolutely right. You have to pay close attention to it.
Yeah.
And I think where people have really got to adjust their mindset around AI is not that it's going to take my job, but let me learn how to use it, because somebody's got to be the director of it.
Yeah.
Somebody's got to sit behind. It is not, well, not in my lifetime, and hopefully not in my lifetime. It's not going to be just a computer. And to your point, as long as things, are going well, everybody will love it.
Yeah.
But the minute that
Oh,
there is an error, or the screen goes black, and it'll happen because it's technology, it's not perfect. Eventually you're going to be like, I need a person. I need to talk to a person.
I mean, that's a struggle today. I feel like
It is.
I would think I'm one of the most techie people that I know, probably that
I
you
would
know.
agree.
My previous career was in the tech industry.
That's cheating. I thought it was just smart. That's cheating.
He's Mensa.
I
but
do as
he's
much as
a
I
former
can
IT exec.
online. I do as much AI stuff as I can. I'm all about crypto and blockchain, all that stuff. Love stable coins. If I have an issue and I'm trying to reach, the bank or the credit card company or whoever, and I get stuck in this damn phone loop.
Wow.
Oh
he
man,
said it. He just said
nothing
it.
irks me more. I just want to talk to someone.
I always say, operator, help. And it's
If I'm not having an issue, hey, I'm cool. I'll use
hears
the
you.
app.
All day long.
I'll use AI.
I told you.
The minute I got a problem,
Yeah.
I want someone on the phone.
Yeah.
Well, there it is.
Well, and I think you're definitely not alone. That's where everybody's at.
Yeah.
Because you can only say operator, or
help,
or green, or 9.
Right.
9 is the number so many times, and have them repeat the same back. And usually what I do is I have very little patience. I just hang up. Like, I'm done with you.
Ooh,
And
she
then
hangs up. I'm the eternal optimist. I'm like, okay,
no,
I'm going to
no,
just
no.
try all kinds of different things.
No,
And
no,
I
no.
often will find, if I just click on the thing it tells me not to click on, that it sends me to somebody. And if I can get a hold of somebody, I'm good to go. Because I could work with somebody.
Well, my patience is not that good. So I just hang up, dial back, and I immediately say, representative, please.
Yes. That's the other one.
I'll hit the 0 button. I'm trying everything I can.
Needs to be a camera on all of us when we get to that point.
There probably is one.
Yeah.
Probably is one already.
Well, you could probably sell the videos on
Yeah.
Steve and I. If you're just being patient and over there and just pressing buttons, I'm guessing yours is not going to go for very much.
No.
You're like,
sadly.
look at this patient guy.
I know.
What is up with that?
I just look interesting. I'm more boring than any of it.
Well, I doubt that.
I can just imagine being on these calls. Oh, thank you. Okay.
I do. I'm very polite if I have to talk to an AI.
Are you from the South, Van?
Oh, I am.
Where are you from originally?
Well, I'm originally from the D.C. area, but I grew up in Athens, Georgia.
Oh, okay.
And then I've been here for 30-some years. So, I mean.
Oh, so this is home.
Born and raised.
This is home.
Yes, it's home. Love it.
Maybe we should send you back to D.C. if you've got all that patience.
My wife wouldn't go with me. That's the problem. I would do it. I'd do it in a heartbeat. But
Come on.
she
I'm
wouldn't go
going
with
in
me.
April for advocacy for
Oh,
mortgage.
yeah?
Yes, we'll go on the Hill together.
Let's do it.
I'll be the one that shows out and pitches a fit, no patience, and you can be the patient one.
Oh, I'll smile. I'll put my arm around them. It'll be good.
Oh, I smile,
Yeah?
but I'm still still no patience.
You're
But
still
I'll smile.
fierce.
Yes, I'll still smile.
He'll say I could tell them the difficult things and they'll thank me. And they realize later that I told them something they didn't really want to hear.
Oh, he lives in his own little world,
That's
doesn't
it.
he?
That's it.
Yes.
And it's a great place to be. I'm just saying.
I don't listen. We might come knocking on the door soon, Van.
What about security? Like, what are the conversations around security? Like, I know there are a lot of concerns with AI being able to imitate people. You know, you don't even know if you're really on Zoom with a person anymore. If it's, you know, some hacker and who knows where.
There is no security. That's my opinion. There is no security. So just be nice to everybody. Be honest.
Do the right thing.
Do the right thing. God will take care of it.
There you
That's
go.
where I'm at.
But has there been a lot of conversation around, because everybody wants convenience, right? Everybody wants to be able to just, I don't want to have to sign a stack of paperwork. I just want to make one signature. But then you've got, okay, well, but the other side of that is your money may end up in North Korea.
So, wow, you just went all the way to North Korea. Man.
He must have read that somewhere because you're not far off. That's already happened quite a bit.
Oh, wow.
And it's, you know, AI voice recognition or non-recognition, whichever you would like to. And banks have had issues with that.
Mm-hmm.
If you really got in and dug into the internet a little bit, you'd see some of the lawsuits that are out there. Obviously, security has always and will continue to always be a problem when you're dealing with people's private data and information. It's just getting harder. And so that's some of those discussions that I say I think the bigger banks will have to lead the way.
Yeah.
And once they figure it out, then everybody else can kind of jump on board with it. But it is very difficult. I mean, there are some small banks that are, you know, getting a phone call just like you get, and it looks like it's a local number for you, and you hear a voice, and it takes a bit to really detect that it's not a human on the other line. We're asking for, they've somehow, you know, breached or gotten into your profile, and they have a social, and they know you've got a bank account with ABC Bank, and they know you've got $100,000 in that account, and they call and they set up this AI voice and they request the transfer, and the transfer is made. And once the transfer is made, there's not much that can be done about it today.
Yeah.
So I think not only how do we manage the security around it for the banking entities, but from a legal perspective, how do you manage tracking those people down?
Right.
They're on the other side of the world.
Yeah, there's no
I mean, it's tough. And sadly, you know, I've been involved in a couple of transactions where we've had borrowers who have wired money at the request of someone thinking that it was their closing attorney, and you know, $200,000 or $300,000 just goes away.
Wow.
Yeah.
And there's nothing you can do about it most of the time, unless whoever, which quite frankly, they're pretty intelligent if they're, you know, going through that method to actually obtain that kind of money or any money. It's hard to catch anybody and have them trip up. So most of the time when it happens, it's just over. So the only thing I can tell people, especially in mortgage transactions, do not do anything until you literally have, you know, you've spoken to the original person you've been working with. You know, verify. You can trust all day long, and I do it every day, but I verify everything I trust.
That's good. I'm hearing there's a new business in internet insurance. That's what I'm hearing. We need to come out with some internet insurance.
I think there
it probably exists, actually.
Oh, you think?
I think it does exist. I don't know anything about it, but I do think I've heard it does exist.
I mean, I know there's like cyber
cyber security insurance.
Yeah. Well, there it is.
So I'm sure it wraps into that somehow.
I mean, you got to think about it. They got doggy and cat insurance. You know,
Right.
they got cyber security insurance.
Well, that's true. Well, yeah. there's that.
Yeah. What about quantum? Is there much discussion about quantum computing? I know it's one of those things I always laugh, when Jamie Dimon or someone like that will go on and say, well,
those are the only two
Bitcoin.
banking names I know, by the way. I said them in the early part because that's all I know.
Bitcoin is done with when quantum computing happens, and it's going to come faster than you think. And I'm like, okay, but like everything uses the same encryption. Like all the banks use the same encryption. The nukes, all the government agencies is the same encryption.
You're going through all the topics today, aren't you?
I'm just saying, like, if that's an issue for Bitcoin, it's a bigger issue for everything else.
Well, yeah. But then maybe we can do the quantum leap.
There you go. I relate to that one a whole lot more than I do on the finance
that went over some people's heads.
That's okay. That's okay.
I think that's
Sam, if you're listening.
Yeah, that's the second question for Jamie Dimon's interview. Honestly, in my circle, there's not much talk about it. Not that it doesn't exist. It's just
it's out there.
Yeah.
Yeah.
Way out there. Hopefully.
Again, I think those are in Jamie Dimon boardrooms,
right.
Not in mine.
Yeah. If someone is interested in getting into the mortgage industry, what route would you suggest they take today?
Well,
given all that you know.
So I will say we are much better off than we were when I got in the business. Like I said, I accidentally fell into it, but we at the National Mortgage Bankers Association, along with a few of our state and local associations, has put together a program called Mortgage Banking Bound. I'm sorry. And MTSU offers that. As a matter of fact, I teach some of those classes for them. We do it as just giving back to the community. Mm-hmm. It's certainly not a full credited curriculum, but it is a course. So it's not the full curriculum. But if they're doing finance and they think finance, what part of finance would I want to go into? If it's mortgage banking, then they have those courses that are available to them. They're doing that also in Colorado and I believe in Michigan. So, and we just had, I do believe, the first agreement to do it at LSU. So we are expanding so that we can at least say there is now a path to get into this business. There are parts of this business that if someone were getting into the business and they were young and they knew nothing, it would terrify me. And I would tell them that. I would be like, listen, if I were you, I would be completely terrified. But if you like...
Because of technology or because of the trends in the industry, why would you be terrified if you were young coming in?
One, I think some of it would be, and maybe I could be wrong here, but I look back over the 40 years that I've been in the business and it seemed like it was really slow pace and it was easy for me to learn because it was a slower pace. I mean, I'm really telling, not that 40 years didn't tell my age here. And by the way, I started when I was 2, just in case you were wondering, okay? So, but applications were taken by hand.
Right.
I mean, literally, I put it in. If I messed it up, they had to initial it, the whole 9 yards. I stood at and I can't remember what they call them, but it's the little machine, like a fax machine that's got the little points on the end of it.
Oh, yeah.
Everything comes out and it's like carbon.
Right.
So I used to wait on a credit report.
Or whatever it was.
What was it?
Was it a mimeograph?
Yeah. Well, I don't think that was the name of the machine. That's horrible. I can't remember. But I remember standing over it. I had ordered a credit report. And it would be 2 weeks before I would get it. And then they would call me and tell me it was on its way. And I stood over that machine to wait on the credit report.
Oh, wow.
Today, I just hit a button.
Right.
And it's there in seconds or milliseconds. So obviously, anyone who was young getting into the business is used to that. So it may not scare them. It's me looking back historically what I walked through. And like any other business, there are bad apples. So are you with the right people to learn? So I think having the expansion of Mortgage Banking Bound is actually, I applaud it. I'm so excited for it because if I'd had that, I would have just been on cloud 9 and wouldn't even have realized it. But today it is so necessary because of the regulation, because of the changes, because of the license requirements. There's so much that has changed over 40 years. that the other thing I would tell them is, and this is true, I think, no matter what age you are, you either love it or you hate it.
Mm-hmm.
I mean, think about what you do, Steve. Not everybody can do that. There are a lot of people who try it, right? But if
I love it and I hate it.
Well, it is a love-hate relationship, I will say that. But you have to have passion.
Sure.
And that's one thing I think that I gained early in my career is I just tapped into the passion of it. And if you don't have the passion, then you don't even realize you're not being taught correctly. You don't realize you're not doing it the right way. And again, at the end of the day, I'm doing what I'm doing. Anybody in this business is doing what they're doing to get someone in a home, create a dream, raise a family, have a backyard, a kid have their own room. And I'm getting a little sappy there, but that's the reality of it.
Right.
Obviously, there are those who move into the $5 million houses, and they have the same feelings. They're just a little different level. But at the end of the day, if you are not willing to serve,
right,
not the business for you.
Right.
And there are people in our business that are not willing to serve, and they still do well. And it doesn't mean that they're bad people or bad mortgage people, but I think you do better. I don't work for my health. None of us do, right? Money has never been a driving factor for me. The factor that drove me more than anything was I wanted to know more about what it was I was doing so I could share it with someone else. And I love to tell, you can tell, I love to talk. I love to tell everything I know. Like, I really want to share it, and I want to make sure I'm sharing it the right way. Well, if people are not sharing it the right way, you cannot help how you're taught and how you're mentored. So if someone was getting into the business, I would tell all those things. I would probably spend a week with them and say, here's the positive, here's the negative. Don't go in with rose-colored glasses.
Right.
It is not going. I mean, I can remember getting phone calls from real estate agents on Christmas Eve.
Sure.
And I've got to walk away from my family, and I've got to take care of that.
Right.
Or there's a problem, that's going on at a management level that I've got to take care of. If you are not passionate, you can't do that. You don't want to do it.
Yeah, it blows my mind. These guys, they're showing houses Christmas Eve, Easter Sunday, whatever.
I remember.
Blows
Easter.
my mind.
Yep. Easter
it's amazing.
Morning, one Easter morning, my daughter was probably, 3, maybe 4.
Right.
And I had put her dress on her, and she had stood on the back of it, and it kind of ripped the hem out a little bit. Well, I can't even sew a button, but I was attempting to try to fix it. And at the same time, I get a phone call from a realtor who is freaking out because something happened with a contract, and we've got to fix it. And I need to stop what I'm doing with my daughter.
Because they had somebody call screaming at them.
Yeah, probably.
Absolutely.
Yes.
And now, was I frustrated about it? Absolutely.
Of course.
But the realtor on the phone never knew that I was frustrated. And I will say, if you're going to really be in the mortgage industry, your family has to support that.
Right.
It is not an easy industry. I am only who I am in what I do professionally because my husband supported me. And he stepped in and he took the pressure off of me as a mom.
Yes.
He played those parts when I couldn't and he was self-employed, so he had much more flexibility.
Right.
And there is a lot of flexibility in mortgage, just like there is in real estate. But unfortunately, you don't set your own calendar. Not even paper calendar.
Right.
You everybody else sets your day. They just do. And that's okay. You learn to love it or you learn to hate it. And that's really the way it is. There's no in between. You either love this business or you hate this business. And if you love it, you're there for the long haul. And just connecting with the right people who do things the right way when people are looking and when people are not looking is what you want to connect yourself with. So those are the things that I would tell people getting into business. It's absolutely possible, but do it the right way.
Yeah. For me, it's this is very often, this is a very large financial decision for people. And what I love about it is being able to see that I've had an impact on someone's life.
Absolutely.
and you don't see that on the individual level when you're just contributing to a nonprofit or something like that. But, when you're working with someone and you know that what you did probably changed the course of their life, that's an amazing thing. So
It is.
that's why I love it.
It's very rewarding.
There's a program for graduating high school seniors to get their real estate license where the state pays for it. Do you ever foresee them doing something like that for the mortgage industry, where they sponsor high school graduates getting into the mortgage business?
I would love to see that happen.
Yeah.
I would love to see that happen because, quite frankly, and I would say probably 60% of the people that I know that have kind of worked their way up do not have a college degree.
Mm-hmm.
I do not have a college degree. And if I'd had one, had I not met my husband, it would have been fashion merchandising. So,
right.
I keep trying to tell my dad, I promise you I dress nice, because he gets really frustrated when he thinks about all that money he spent, and I just walked away from it. But
well, now he can watch this video and see you have this beautiful top on.
You're sweet, man. I'll take a picture and send it to him. How about that? But I think we have to, as an industry, learn or get to a point to where we're willing to invest in people like that. And I think we're kind of at that point because the average loan officer today is like 55. Okay, so think about that a second.
Yeah.
The average age of a loan officer, who is the person who is actually helping the realtor and the borrower at the initial stages, is 55.
It's a great age.
It is a great age, but they're going to want to stop at some point, right?
That's true.
So we have to do something to intrigue them to see this is a really good business to be in. It's hard work, but quite frankly, any industry that you're in, if you're going to do well in it, you've got to be willing to put in the hard work.
Nothing's easy.
No, it's not. And if you're not willing to do the hard work, you're not going to be successful anywhere.
That's right.
And there are no handouts in life, or there wasn't for me anyway.
It's rare.
So,
well, if someone wants to get in touch with you, have further conversation, what's the best way to reach you?
Oh gosh. Well, I'm usually on my phone texting or answering a call all the time.
Yeah.
And certainly anybody who wanted to talk to me can use that number if they would like, or my email. They can email my business address, which is tgravlee at bankoftennessee spelled out.com. Longest email ever. Or you can call me or text me at 205-296-9940.
Wow.
Well,
is there, before you thank her, I
right.
wanted to, what is your reason for coming on today? Like, what were you hoping to talk about or whatever? Is there anything, any motivating factor that you're like, yeah, I'll do this podcast?
Man is always shocked that people would come on our podcast.
I'm always interested. Like, I'm interested in why somebody would take time away from their bank or whatever, their company, to come and chat with us.
Well,
you're the president of a bank. I mean, come on.
Well, just in the mortgage division. Don't.
Well, that's okay.
I don't know anything about checks. Okay, I cannot get you a special check.
That's okay. I got my own.
But, honestly, I think I got a couple of emails from your assistant.
That's right.
And I didn't respond. And one day it just popped up. What I will say is I love speaking about our industry.
Cool.
I love being a part of the change of our industry. I mentioned just a minute ago, I'm headed to Washington for Day on the Hill. We'll spend a couple of days with senators. We do the same thing here. Somebody has to speak out. So how do I get new people into this industry if I don't make it interesting? Now, folks may turn me off 2 seconds into this podcast, and I'm sorry. I'm sure it won't be your most viewed.
Don't worry, because they'll cut it up into little snippets, and they'll start seeing it whether they want to see it or not.
Okay, well, thanks.
It
I appreciate
happens,
that.
so don't worry.
But the more that I saw the email, I kept going back to it, and so then I did a little bit of research on you guys. And the thing that was intriguing to me is I read all of your bio, Steve, and kind of what your experience was. And then I read yours, Van, and I was like...
Which is very different.
It's very different. And I was like, how did these two guys get together?
Oh, yeah.
Oh, that's a long story.
I I read a little bit more and I thought, this would, if nothing else, it's going to be interesting.
Oh,
and
yeah.
it's something that I can look back on as a memory. But the biggest
good.
reason is, I have worked hard for a very long time. And if you had asked me to do this 10 years ago, I would have felt very unworthy. And I don't necessarily feel worthy today. So I don't want to sound like, oh, look at her. But I also realized in order for people to know that it's a great business, for people to understand what it is that I do, that I don't just make decisions every day or, talk about revenue.
You're not in a dark robe in the back room with a gavel saying yes to you, no to you.
I have the little easy button.
That's right.
No. It was just an opportunity for my voice to be heard, hopefully. I love social media stuff. I probably don't do as much of it as I like to, just because I'm like, I don't want to look like cheesy. But I thought,
I'm all about the cheese.
That would be great.
Nothing but the Gouda, so help me.
That's true. I thought that'd be great to put on my social media. Yeah. A little bit of exposure.
You bet.
Not that I'm trying to be anybody that I'm not. I'm very down to earth, but I'm genuine and I'm passionate.
And you're making yourself available to people.
I am.
Yeah.
I am. And that was really the reason.
Love it.
I totally ignored the emails for a little bit, but then
I do that a lot myself.
Yeah. Well, you have to crazy. Some of them. But you guys did intrigue me. You are like complete opposites. Complete. And I thought that would have to be so much fun, and just to sit in a room with them. So if it never airs, it never airs. No big deal. But at
that's
least
happened too.
Yeah. Well, I'm sure. I'm sure it has. You never know who you're getting behind this microphone, right?
Never intentionally.
Never
we had some technical difficulties.
We've had a couple.
Sure you did, Steve. But it was just intriguing, and I felt like it would just give a little bit of opportunity for people to hear.
Love it.
Watch several of your videos on YouTube.
Yeah.
And you had so many, it's just a wide variety.
It's been amazing. People. Like, I have loved it. When he told me for years he wanted to do this, and I was like, who would ever want to watch that?
Well,
we're so different. And then I said, who would ever be willing to come on and talk to us? Like, what in the world? And then these fascinating, amazing people show up, and I'm like, well, this is kind of interesting, and I'm like, let's do more of them.
Yeah. So. And the other thing is, now I know you guys.
Yeah,
right?
For sure.
So when you get back in the music business and I fail or retire at mortgage, I can call you up and say, hey, will you record me?
Yeah. Oh, yeah. We got the setup right here. Ready to go.
I want to be a singer now that I'm out of mortgage. That's what I'll tell you.
I love it. Is there anything we didn't talk about that you wish we had?
I don't think so. I mean, Steve said he wasn't going by the written questions. And,
he didn't. I've been watching.
I don't even know what was on that sheet of paper, but no, I think we've covered it. I appreciate the opportunity to come on and my voice be heard about our industry. It's a great industry, and again,
changes lives.
It does, but being passionate about what you do, no matter what it is, that's the real key to being happy. That's gotta make the cut right there. What she just said.
Well, of course, I haven't said thank you yet. So.
Well, that's true. Now you could say. Now you could thank her.
Tammie, thank you for coming on today. It was a pleasure speaking with you.
Thank you, Steve. Thank
you.
And with that, we will see you guys next time.
Yeah.
Well, that's a wrap on today's episode of Behind the Curtain, Nashville's movers, shakers,
and tastemakers.
We hope you've been inspired by the stories of passion, perseverance, and innovation right here in Nashville.
A big thank you to our guests for sharing their journeys, and to you, our listeners, for joining us. And of course, our gratitude to Accord Real Estate for making this conversation possible.
Don't forget to follow or subscribe to our podcast on your favorite platform.
Thank us.
Yes, you did.
Oh, I guess I did. Well, thank us. Okay.
Like I was saying.
Oh, yeah.
Don't forget to follow or subscribe on your favorite platform to catch every episode, and hit that notification bell. We've got plenty more fascinating guests lined up, ready to share their insights and inspirations.
And we love hearing from you, so reach out to us with your thoughts, questions, or suggestions for who you'd like to hear from next.
Until next time, keep chasing your dreams and making your mark in Nashville.
Oh, my goodness. Remember, I'm talking to Casey
it's
Kasem.
The people behind the scenes that make the city shine.
I love it. Take care. See you behind the curtain.